Hey, what's up guys? John here. Every mainstream media outlet is putting out one story right now, and that story is that a regional banking crisis is about to sweep America.
Regional lenders' credit rating was downgraded to junk at Moody's. Shares are trading at their lowest level in more than 20 years here.
And this crisis is going to be the real one, not a little situation like Silicon Valley Bank, that failing, First Republic failing, PacWest getting acquired by Bank of California, these small little situations where people are concerned about a bank run. This real story is what we all need to pay attention to. What's happening March 11th, what the Fed is doing. It's going to put America into one of the biggest periods of panic that we've ever before experienced. And I'm going to put this in front of you. I'm going to give you the facts. I'm going to show you exactly what they're saying. And I'm going to show you why regional banks are likely walking into a massive crisis. And JP Morgan Chase knows this is the biggest moment for them. This is the moment where they're going to go from being a really big bank to a massive conglomerate that's going to essentially take over America. I mean, look at this. Right now, at a period where over the last 12 months, 60,000 bank employees in America lost their jobs. They're opening up 500 new branches. They're renovating 1,700 locations. They're adding 3,500 employees over the next 3 years. Why? It's because one reason, and I'm going to break this down for you in this video. Please hit the like button. Hit the like button. YouTube will share this content to educate the people about what's going on in America's economy. And if you'd like to fix your credit to position yourself for this massive wealth transfer that we're walking into, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session for Monday. Take a look at this. So Janet Yellen came out saying, this is 19 hours ago, Treasury Secretary Janet Yellen said that a combination of higher vacancy and interest rates in commercial real estate will hit the banking sector, but that she does not expect it to be a systemic risk. Well, she also said that inflation will be transitory. And how's that working out for America? Inflation, she came out yesterday saying, oh, sorry, this is permanent, it's here to stay, and in fact, it's probably going to get worse. So you start to connect the dots here. Regional banks hit with third credit downgrade as crisis concerns linger. New York, I mean, you just look at this. Big banks have drastically cut overdraft fees, but customers still pay $2.2 billion. Well, the CFPB, Consumer Financial Protection Bureau, is working to reduce these fees dramatically. Now, America might say, hey, this is a great thing for us. These banks, they need to be stopped. But what they don't realize is that most of these fees, a few small banks have become overdraft giants. This is what props up these regional banks. And so for 6 banks, overdraft revenues accounted for more than half of their net income. 3 had overdraft revenues greater than total net income, meaning they lost money on every other aspect of their business. Now, when they're losing this, potential lucrative source of income, and they are walking into a situation where a lot of their loans that they've extended on commercial real estate, on residential real estate, on auto loans, on personal loans, on business loans are going south, and interest rates skyrocket. What does this mean? It means they're going to continue to suffer a massive period of headwind. And this is why JP Morgan Chase is really getting ready for this takeover. So, I mean, look at this. Barry Starlight, he's the founder of Starwood Capital, own 180,000 units in America, 180,000 housing units in America, one of the biggest real estate investors in this country. And what he's saying is that $1 trillion in losses are going to be coming. $1 trillion in losses. What a lot of people don't realize is presently, according to NBER report, about 14% of all commercial real estate loans and 44% of loans on office buildings appear to be in negative equity position, meaning the debt is greater than the property value. That increases the risk that borrowers won't repay on their loans. And who owns that housing stock? Well, that loan stock? It's regional banks. $1.5 trillion as they get rolled over from now until 2025. They control 80% of that debt. 80%, according to Goldman Sachs, around 80% of bank loans for commercial properties come from regional banks. These banks, due to their size and regional focus, are often able to offer more personalized services and understand local markets better and build long-term relationships with developers and property managers. And so think about that. He's saying, Barry is essentially saying that regional banks are going to take an $800 billion loss. $800 billion loss. And I mean, that's just the tip of the iceberg. Then you start to really kind of look at what's going on. Like, look at the size of this. Look at the size of this building. This building just sold for $2.4 million, $9 a square foot. Think about how much a regional bank likely lost on this one deal. And this is happening all throughout America. All throughout America. How do these regional banks withstand the impact that's coming? On top of that, credit card debt that moved into serious delinquency, which is 90 days past due, was 6.4% on the fourth quarter of 2023, a 59% jump from just over 4% at the end of 2022, per the New York Fed, right? So all of these loans that these banks have issued, personal loans, business loans, are walking into the same type of category as commercial real estate. Massive defaults, like massive problems. Average credit card balances jumped 10% to a record $6,360, and more consumers fall behind on payments. Then same thing is happening right now with apartment buildings. What many people don't realize about apartment buildings, large commercial loans, because commercial is 5 units and above. It could be land, it could be an industrial property, warehouses. These commercial loans, when you have an apartment building, they're valuing that apartment building based on the income, the net income received from that owner after expenses. And they're looking at, does it make sense to lend on this deal or not? Usually they want to see a 30 or 35 or 40% down payment on these deals. And it gives the bank a sense of, relief that they know that, if the building dropped 20, 30%, they'd still be able to get their money out. But when buildings are dropping 70 or 80%, it's an issue. And it's very unlike homes. When many people buy a home, even though 23%, according to the HUD, of Americans who own their homes that have mortgages are in negative equity, meaning they owe more than it's worth. The people that own homes, they're putting their credit score on the line. They're putting, their financials on the line. When they're buying an apartment building or commercial property, these investors, if they buy the deal, they're not personally guaranteeing it unless they've decided to do so. But most of these loans are simply backed by the asset. So they can simply hand the keys back to the bank, and then, 6 months later, they can try to raise more money and do it again. So they're not on the hook the same as a homeowner. And when you start to look at the size of risk that these regionals are taking right now, it is a big problem. And a lot of these deals, are falling. They're falling and falling really, really quickly. 3 days ago, this one defaults on an $88 million loan linked to San Francisco apartments. But then look at this. The BTFP. The BTFP, this is set to expire March 11th. And when this expires, what is going to happen is credit is going to really tighten up in this country. So if you are a small business owner, you're someone that depends on lines of credit, it's going to get a lot harder after March 11th. It's going to get a lot harder, and the loans are going to cost a lot more. The interest rates are going to be going up. So it's going to be a really, really big opportunity for people in the payday loan industry, car title loans, these predatory loans, they're going to start popping up. And the reason for it is there's not going to be alternatives, right? These predatory lenders are going to get bigger and bigger and bigger and bigger as Americans get cut off in terms of credit. So the Federal Reserve Board on Wednesday announced that the Bank Term Funding Program will cease making new loans as scheduled on March 11th. The program will continue to make loans until that time and is available as an additional source of liquidity for eligible, that's the key word, eligible institutions. During a period of stress last spring, the Bank Term Funding Program helped assure the stability of the banking system and provide support for the economy. After March 11th, banks and other depository institutions will continue to have ready access to the discount window to meet liquidity needs. As the program ends, the interest rate applicable to new BTFP loans has been adjusted such that the rate on new loans extended from now through the program expiration will be no lower than the interest rate on the reserve balance in effect on the day that the loan is made. So, rates are going to be going up. March 11th is the date that this is set to happen. And the BTFP continues to be the largest federal credit facility, accounting for 95.5% of advances to banks. So, just look at what's happening. Small business owners have had a really challenging couple years, right? They've had a really, really challenging couple years. More people are spending more time on their devices, making online purchases, supporting larger corporations, which is unfortunate, but that's what's happening. And so as this is happening, small businesses, they have less customers. So they have less customers, they're borrowing at a much higher interest rate, they are, hiring employees at a much higher cost, their insurance is going up, they're getting hit left, right, and center. And when these small businesses own 70% of all single family and 1 to 4 unit properties in America, it's going to equate to one thing, a massive sale of property as credit continues to tighten up. What do you think about this entire situation? Do you think that we're going to be walking into a situation where millions of Americans are going to be forced to sell off assets as the economy starts to go through this really, really big change and the banking system starts to, get reset? It looks like it. And it looks like JPMorgan Chase is preparing for a massive expansion for this very, very, very reason. Drop below. Let's have a conversation about this. Do you think we're walking into the greatest wealth transfer in American history? And if you'd like to fix your credit to position yourself for this opportunity, I think it's going to be a massive opportunity. We'd love to help fix your credit. If you have any credit issues at all, just one late payment on a credit card, one late payment on a bill can drop your credit score a whopping 180 points and stay in your record for upwards of 7 years. So if you have any issues at all on your credit report, go to greatcreditfast.com. Don't let one issue get in the way of a bright future. Click the link in the description just below this video and schedule a call for Monday. Catch you next video.